Hello students, welcome you all. I am Shrikant Gangavne. Today onwards going to conduct your lectures of the subject Business Practices of NBFCs. That is paper number SDC 7 of your BO degree program in Financial Markets and Services. Friends, in this first lecture, let's discuss syllabus and just take the review of content of the syllabus. You have 5 units in this paper. Let's move on the first unit. First unit is devoted and deals with introduction to NBFCs. First content of this unit is meaning, definition and types of NBFCs. So let's discuss what is NBFCs first. NBFCs are non-banking financial companies. NBFC is a company registered under the Companies Act 2013 of India and engaged in the business of loans, advances, acquisitions of shares, stock, bonds, hire purchase business and insurance business, etc., but does not include any institution whose principal business is that of agriculture and industrial activity. We are also going to study the types of NBFCs such as asset finance company, investment companies, loan companies, infrastructure finance companies, non-banking financial companies and microfinance institution and many more. NBFCs are classified into two categories. Number one, deposit taking non-banking financial companies. We called it NBFC D, and second one is non-deposit taking non-banking financial companies. That is NBFC ND. Deposit taking NBFCs can raise funds from the public, whereas non-deposit cannot raise the fund as deposit. In the second content of this unit, we are going to discuss functions of NBFCs such as retail financing, hire purchase services, infrastructural funding, venture capital services and many more. So in this second content, we are going to discuss the functions of NBFCs. Non-banking financial companies play an important role in promoting inclusive growth. Inclusive growth means those who are not included in this the stream of finance, means they don't have the bank account, they don't have the accessibility of finance, etc. So the NBFCs plays an important role in promoting inclusive growth in the economy, means they provide the service and finance to need of customers who are excluded bank customer, means they don't have the access of banking services or facility, so they are out of the we called it bank excluded customer, means those who do not get finance from bank, so they get from these companies. Details of role of NBFCs we will discuss as we move forward. In the third content, we have to discuss the regulatory framework of NBFC, the working and operation of NBFCs with a regulatory framework. NBFCs are regulated by Reserve Bank of India within the framework of Reserve Bank of India Act 1934. In 1934 Act of Reserve Bank of India, Chapter 3rd B deals with this NBFC non-banking financial companies. The working and operation of NBFCs are also the direction issued by RBI time to time. Let's move to the last content of this chapter. In this content, we are going to study the growth of NBFCs in India. NBFC sector in India has undergone a significant transformation over the last few years and plays a significant role in the growth of the Indian financial system. So the role of NBFCs are increasing day by day, and these companies are also helping the RBI's important policy of financial inclusion. Also means those who are out of the banking, those who are not getting the services of bank, they are getting from these NBFCs. Let's move towards the second unit of this chapter, of this paper. The second unit is the registration and capital of NBFCs. The first content is licensing system for NBFCs in India. NBFC registration or NBFC's license can be obtained in around 90 to 120 days, and license must be taken from RBI under the 45 IA of RBI Act 1934. The financial institutions wishing to register as NBFC must first be duly registered either as per the Companies Act of 2013 or earlier Act of 1956. So those companies want to register, take the license from RBI, they have to register first under Companies Act 2013. We have to discuss process of registration of NBFCs in India and RBI Act framework, asset liability management system also in the 2.3 content of this second unit. In the last content of this unit, you have to study the capital structure of NBFCs in India. NBFCs have to maintain a minimum capital to risk weighted asset ratio, that is we called it in banking term CAR. It is a compulsory minimum capital requirement. It is given by the Basel Committee, Bank for International Settlement. So the Basel standards accepted by Reserve Bank of India, and these are also applied to these NBFCs. So the minimum capital to risk weighted asset ratio should be 10%. The present minimum CAR stipulation at 12% to 15%. In the third unit, let's move on. Third unit. In the third unit, we are going to discuss management and functions, business and growth of different types of NBFCs. We have to study functions, the business growth of different types of NBFCs. For example, business and growth of loan companies, infrastructure finance companies, how they are growing and how the business is going on of these companies. We have to also study the growth of investment companies, housing finance companies, etc. The last few years have viewed a significant transformation in the way that NBFCs function in India. The businesses have welcomed NBFCs loan because some companies because they make the process of acquiring loans relatively hassle free. And so it is a relatively simplified process the NBFCs offer than bank. So the loan companies, some businesses have welcomed NBFCs actually. businesses welcomed loan companies, NBFCs, the type of loan companies. In the fourth unit, loan and advances and investment of NBFCs we are going to study, such as type of credit facilities. NBFCs NBFC is a heterogeneous group of financial institution. They offer facilities like equipment, lease finance, hire purchase finance, personal loan, vehicle loan, working capital loan, housing loans, and many more. In the second content of fourth unit, in the second content of this fourth unit, we are going to study credit appraisal techniques of NBFCs. Means how to evaluate the credit by these NBFCs. Generally, banks and NBFCs take a look at certain ratios in order to check your loan eligibility. They are some of the ratios that are useful in the credit appraisal process. For example, the fixed obligation to income ratio, that is we called it FOIR ratio. So these are some credit appraisal techniques or ratios the bank and NBFCs use. The third content deals with documentation and credit monitoring in the credit monitoring. So the fourth content of this unit is devoted to the problem related to loan and advances, such as debt recovery, manual handling of lending process. Then the lending process can be cumbersome and expensive lending. The process can be time consuming and tedious. So these are some problems we are going to study in the fourth content of this fourth unit. In the last fifth unit, we will discuss audit and compliances of NBFCs. NBFC needs and it is needed and importance of audit for NBFCs, because it is by the it is compulsory by the rule by RBI and RBI guidelines. Audits are necessary elements in the functioning of any company and also for NBFCs also. NBFC need to obtain the certificate from statutory auditor that they are engaged in non-banking financial institutions. Holding a certificate of NBFCs registration under section 45 IA of the Reserve Bank of India Act 1934. So they have to be as per the guidelines of RBI, and they have to do their audit from the certified auditors. We are also going to discuss reporting by NBFCs to regulatory authorities. So the regulatory authority of NBFCs is Reserve Bank of India, and auditing authorities and process and problems relating to audit procedure also we are going to discuss in this chapter. We will discuss all these points as we move forward, as we start actual contents of the syllabus. So friends, that much in this first lecture, in small teeny lecture. You are supposed to write your name in the comment box for the attendance of the lecture. If you have any queries or questions, you can mail me. In the first slide I have given my mail ID. Thank you. See you again in the next lecture.